Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Hey, and welcome to another episode of the Finovate podcast. Joining me today, we have Jesse Wedler, partner at CapitalG. Jesse, thank you so much for joining me today.
Thanks for having me, Greg. I'm a fan of the podcast and the conference and really excited to chat with you.
Excellent. Well, and if anybody doesn't know who CapitalG is, I would recommend Googling them real quick before we get going. That's terrible. That's a terrible way to start the show. Let's go ahead and start a different way. Jesse, go ahead and give us an introduction on yourself and your role at CapitalG.
For sure. So I'm a partner at CapitalG. We're a growth-focused investment fund backed by Alphabet. And our approach to the world is investing in a small number of transformative businesses each year and making large concentrated bets on those companies. And what we mean by transformative is companies that can transform the industries they're operating in. So finding the next generation of Googles out there, companies like Stripe, like UiPath, like CrowdStrike, some investments that we've made. And we make the investment and then we leverage the resources of Google, our LP parent company, to help companies scale faster. And that is, bringing in engineering expertise, bringing in marketing expertise, and a whole host of other things where we can find really bespoke, best-in-class experts to help growth stage companies with the challenges they're working through.
Excellent. No, I think that's really interesting. And obviously we're talking specifically about the fintech space. This is it's not everything that CapitalG looks at, but it's something that you look at. What would you say is your investment strategy when it comes to the fintech space in particular? Are there any pieces that you and your team are especially interested in at the moment?
Yeah, good question. And so, I didn't give enough, I guess, on my personal background, but I've been at the firm for 8 years. And, I came to the firm because of the focus they have on, finding and investing in the next wave of transformative businesses. And for us, fintech has been an area of focus really since the beginning. And so 8 years ago, we started making our first investments as a fund. And our first ever investment was in Lending Club, which, was kind of a really big fintech story years ago. And from there, we invested in Credit Karma. And then in 2016, we led a round for Stripe. And from there, we've invested in MX, Robinhood, Albert, Next Insurance, Applied Systems, and more recently, a few others. And so I think in total, we have probably 12 or 13 fintech-focused investments. And for us, this is one of the areas, one of the themes that we spend a lot of time thinking about, because we think, as a kind of a global view of technology, financial services has such a need for better technology, both in terms of inclusion and access, but also in terms of transforming the legacy financial institutions. And so it's a spot that we spend a lot of time thinking about and have a decent piece of our team dedicated today.
Sure. No, I think that makes a lot of sense. And Lending Club is also, just for the record, a company that was very formative in Finovate's early days as well. We first saw them on stage way back in 2008. And I believe that video is still available if anybody feels like taking a trip down memory lane and seeing what a fintech conference looked like more than a decade ago. So, let's talk a little bit about the different kind of spaces within fintech. Obviously, there are a lot of different areas that you could potentially focus on. What types of companies are you personally particularly interested in within the CapitalG team?
Yeah, so I focus just on B2B fintech. And for me, for my focus, that means companies that are selling to other companies. And that's discrete and different from, so the other focus areas we have, like crypto, which I think, crypto is a full-time job in itself, and we shouldn't kid ourselves and try to kind of dabble in it. So we have some people that just focus just on that. And we have some people that focus just on emerging market, consumer-focused fintech, where there's a lot of growth going on right now, both for consumer and SMB-focused products. But for me, it's just on B2B fintech, where it's anything selling to fintechs or financial institutions to enable financial products and delivery of some sort of financial service. I know that's broad, but I think we can dive more into what that looks like specifically. I guess the other way that I think about this market is there's a lot of investment going into venture fintech. I think 20 billion annually, but there's a huge amount that's spent on just supporting the financial infrastructure of the world. I think it's like 500 billion annually spent on IT for FIs globally. And so I think there's this huge opportunity for greater penetration of technology into that broader financial services ecosystem. And we're seeing this across every subvertical, from mortgage, insurance, brokerage, but it's still really low penetration, like sub 10% in a lot of these areas in terms of the digital penetration. And so I think there's, a 10, 20-year trend here of better technology penetrating these verticals. And that's, for me, what excites me about B2B fintech and where I spend my time focusing.
Sure. No, I think you're spot on that there's a lot more to do in terms of getting some of these solutions into the, the fabric of some of the financial institutions a little bit more. Certainly something we've seen a lot on our side as well. Companies coming across the Finovate stage looking to get involved with financial institutions of a lot of different sizes and different verticals within those financial institutions. And an interesting thing that's kind of been happening from our standpoint over the last couple of years, we've seen a lot of the really large financial institutions taking some of the pieces that they might normally have gone out to fintech vendors for and trying to bring them in-house. There's a lot of accelerators launched by major banks. Clearly, they're trying to bring developer talent into their own organizations, trying to develop platforms and products for themselves. And this has kind of changed the way the fintech ecosystem is working, because instead of having these gigantic potential customers out there, now a lot of them are looking more at kind of smaller financial institutions, credit unions, and things like that. Now, that's not to say there's not still opportunities with those major financial institutions, but it has shifted a little bit. What's your take on that? The way that we've sort of seen some of those larger companies bringing some of this development in-house?
Yeah, I think it's a little bit frenzied, to be honest. Like, there's just so much going on in terms of the agendas that all these companies, big and small, have. And I think, right now, that, like you're saying, like a lot of these larger, especially if you look at the banking, like top 4 banks are going to try to do everything themselves. The super regionals, they're going to do a mix of kind of buying and building themselves. But then community banks, credit unions, like they really don't have the capabilities in-house, or at least most of them don't, to go build themselves. So I think you're spot on that is a natural kind of segment within banking, but also in other areas where the smaller, the not kind of head of the tail companies need help from third-party companies, from fintechs who are building the infrastructure and the products they need. And I think that is a natural segment to focus on right now. I think there's other layers to it, though, where there's common infrastructure where no company, regardless of size, really wants to build it themselves. And so, example of this would be something like Twilio, or a more recent example would be a company like Notarize that we invested in earlier this year, where no company should go build digital notarization technology. That should be common infrastructure that a company like Notarize just builds and offers to everyone. So it's always a little bit nuanced, but I think there's a market for everyone, and you just have to be really focused on the specific market you're serving, so that you don't get too caught up in trying to sell to customers that might not be likely adopters.
Sure. Another piece we were talking about before we actually pushed record here is looking kind of outside the financial institution group as well, and looking at companies, either tech companies who are implementing what you could normally think of as fintech solutions in various places. Companies need to get payments widgets installed. They need to verify identities and things like this, which kind of come from a fintech space to some extent, but aren't certainly limited to financial institutions and their applications. How big of an opportunity do you think that is, looking kind of beyond the walls of the financial ecosystem for areas where some of these solutions might find life in other businesses?
Yeah, I think there's a huge, broad opportunity for embedded finance. I think we have to be careful with like how we define it, because I think it's, nobody has a definition for this like we were talking about. I think there's so many natural points of attachment, though, for financial products. And the simple one that I always think about is when you're buying a car online through Carvana, through whoever, there should be an option just to buy insurance right there. And that's where it makes a lot of sense. But, when you get into the corner cases of, like every company out there offering, embedded payments or embedded loans through their site, like that, I don't know, is that going to exist long term? I think there's an open question about who's going to win embedded finance from a company perspective, but I think it's a very clear large opportunity from an infrastructure perspective. And so that's what excites me about it is, hey, who knows who's really going to end up winning at the end of the day at the kind of company level. who's offering these financial products to their end users, but we know they're all going to need infrastructure to get there and to offer it. So it's a huge opportunity, I think, in the next few years for companies that are building infrastructure focused on this specifically.
Yeah, no, agreed. And I think, we don't need to go too far down this rabbit hole, because if you start pulling threads here, you start getting to questions like, what is a bank, right? If you're offering banking services, does that make you a bank? Is Starbucks a bank because I can put money into an account there and hold it for them and then go scan my phone at checkout? Is Venmo a bank? Go ahead.
And do I want to have 20 different banks that I'm technically a consumer of? Like, that sounds exhausting.
Right. Yeah. Keeping track of where you have money stashed with different corporations and who you're willing to, up that card ahead of time. I'm going to put $200 down so that I can ease the payment process later on. So we don't need to go too far down that rabbit hole, but I think it is interesting to just be conscious that rabbit hole is there. Because there are going to be consumers who are going to start asking some of these questions. Why do I need to keep my money in this kind of financial institution? What services am I actually getting here? And obviously, this is going to be fascinating to watch over the next couple of years as people, and really consumers will be the ones who kind of vote with their money. They'll move it where they want to move it. And the rest of the industry will have to respond to what people want to do. So as they say, kind of watch this space. Another interesting piece that we haven't talked about, though, is kind of fintech that's designed to be helpful to other fintech innovators. Certainly something we see a lot on the Finovate stage as well. Service providers to other fintech companies, or solutions which can be embedded into another fintech process. And this is potentially another really large area as well, and potentially growing area as more and more service providers come into existence, supporting those service providers themselves, to use the old analogy, during the gold rush, time to sell shovels. And there's certainly a lot of people who are selling shovels at the moment. How does that opportunity strike you in comparison to some of when we normally think of B2B fintech? We don't normally consider that, but how does that opportunity strike you?
Yeah. Well, first of all, I think that, what you're highlighting is there's this really interesting cycle in terms of, like, the whole space is just getting more competitive to get those end users, because you have embedded finance going after it. You have legacy FIs who are trying to get better. You have up and coming, direct fintechs that are serving users they're competing, and everyone just needs to get better. And I think that is really fun for the space, because there's just gonna be a lot of innovation going on, but it's great for the infrastructure side, because none of these companies should focus on building or rebuilding the picks and shovels, as you put it, to go offer their products. They need to focus on, what is the value they're actually creating, or the community they're creating? What is the reason why people should use and continue to use their products? And so, to your question, I don't know exactly how you should define service provider, because that's kind of broad. But I think, anything in terms of whether it's identity or the actual payment rails, or, the fraud and AML side and compliance, like, you shouldn't go build that yourself in any state of the world. And so I think we're going to see winners show up in all these spots because there's such common needs. And I think that the question is, who's got the best mousetrap to actually create large defensible businesses in each of these areas, because there's so much fragmentation and competition right now. And so really exciting to see, but still pretty uncertain in most of these verticals.
Sure. No, I think that's fair enough. And you're right. It's just going to be fascinating to watch as this all unfolds. And, we'll keep an eye on the space, as we said. So we're coming up on the end of our time here. And I do want to just take advantage of the opportunity of having you on the show. You're in a unique position to be able to offer some advice to a lot of our listeners who are on that kind of early stage fintech startup side. Obviously there's a wide range of companies and the various places that they are in the fundraising journey. But I'd like to just get some quick advice from you for companies who are in the process of building companies right now, whether they're, early stage, kind of seed stage, or more kind of mid stage, later stage, growth stage is what we sometimes call them. What advice do you have for companies about making themselves attractive to someone like CapitalG at that right stage? And when is the right time to get involved with you?
Yeah, good question. So we focus on investing at Series B and beyond, where there's clear product market fit, but you want to go, scale the business in a meaningful way. That's where we love to get involved. And I think if I look across the companies that we've been most successful with and that we admire the most, I think the common thread is simplicity, which might sound funny to say, but it's a simple and very clear mission. And whether it's Robinhood offering free stock trading, whether it's Stripe with simple online payment integration, or more recently ID.me being the identity layer of the internet, or Mantle being the business account opening product for banks. I think simplicity always wins, because that's what you need to recruit talent, to recruit investors, and to recruit customers at the end of the day. And the teams that seem to get lost are the ones that overcomplicate what they're doing and try to do too many things at once.
I hope any potential Finovate demoers are listening to that, because I always say this when you get to the coaching process: you need to have simple messages. You need to be able to really clearly articulate who your product is for and why they want it. And you would be amazed at how often I get pushback on that, on some of those calls. And I'm like, I promise you guys, this is for your own good. You need to be able to articulate this, and to have you validate that, I think, is really helpful. So anybody who's going to demo, write that down. Cool. Well, that takes us to the end of our time here today. Again, I've been talking with Jesse Wedler, a partner at CapitalG. Jesse, thank you so much for taking the time to chat with me today. And we've got a lot to follow up on when we talk again at some point in the future.
Thank you, Greg. This was really fun.
Excellent. We'll
Cheers.
see you soon, I'm sure.
The Finovate podcast is produced by Informa Connect in association with Provoke.fm Media. Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.